What's good, YouTube? It's Money Mayor here, and welcome back to my channel. Thank you for clicking on the video first and foremost, and welcome to Fibonacci 1.0. In this video, I'm going just to be giving you guys a basic description on the Fibonacci Retracement tool. I'm going to be telling you guys the price reversal zones that are included within the Fibonacci Retracement tool, what to expect at each potential price reversal zone, and what to look for once price does sit there and come into contact within one of these price reversal zones. So make sure you stay tuned for the full video. Make sure you like the content. Make sure you subscribe to my channel. And let's get straight into the video. We out. The first price reversal zone that is shown on your Fibonacci tool is the 23.6%. For an uptrend, when you're drawing your Fibonacci tool, you want to start from the previous high low point and extend the Fibonacci tool to the top of the new higher high. And like I said, the first reversal zone we're going to be discussing is the 23.6%, and this is just where you can sit there and see a continuation in price, meaning that price will sit there and come to the 23.6% and very aggressively and very fastly sit there and just continue on to a new higher high point. Now, because this is the first price reversal zone within the Fibonacci tool, and it is such a minor retracement, it is not considered an area where true higher lows are being formed. So if you do see price sit there and find a support around this area in an uptrend, do not take it as a true higher low point. What you would normally do is sit there and just extend your Fibonacci tool to that new higher high point, and then let price sit there and retrace to a steeper retracement that's past the 23.6%. More times than not, it will retest that same area that it did find that 23.6%, use it as a 38.2% like it is right here, and then continue the overall uptrend. And then this point will be considered your true higher low point. Another thing about the 23.6% is that it is where you can sit there and find a lot of consolidation. Consolidation is just where price is continuously moving back and forth. Buyers and sellers are constantly pulling each other for an extended period of time. And this is just another reason why I do not recommend trading 23.6% retracements, because the two options are either consolidation and a quick continuation. They're not worth the risk to me to trade. I would sit there and wait for a steeper retracement. So in a downtrend, a 23.6% retracement might look something like this, where price created a lower high point, extends down to a new lower low, finds a resistance here at the 20.6%, and then continues its overall downtrend. This continuation, like I said, is going to be very quick and swift. Really just a lot of traders that are already catching the overall move or the main move are just sitting there scaling in here and just adding on positions to max out their overall profit for the day. But this is just 23.6% here. Let's move on to the 38.2% PRZ. Okay, so the next price reversal zone that price will sit there and try to retrace to is the 38.2%. So the 38.2% is just basically the second level where price will try to find either a support or resistance at. And a few things about this price reversal zone is that it is actually the most aggressive price reversal zone. So once price sits there and finds either support or resistance at this zone, you can really expect price to just sit there and really move very, very fast from this point. Like it is at sometimes I've been in 38.2% trades where in 5 to 10 minutes price is already hitting TP1s, based off of smaller time frames, like the 5-minute and all that. But regardless of what time frame you're on, if you see that price is at a 38.2% and price is respecting it, you can really expect very aggressive push of the overall trend. This is also where true high low points are being formed, unlike the 23.6%. The 38.2% is the area where you can sit there and consider a true high low point being formed. And you can sit there and use that as your new high low point to sit there and extend your Fibonacci tool. So say a new higher high was sitting there formed here. You can then sit there and use this previous high low point that was made and use it as your new 100% retracement on your Fibonacci tool, and then continue your overall Fibonacci retracement work. But I mean, that was just a 38.2% there. Very aggressive, very fast. And let's move on to the next price reversal zone. So the next price reversal zone that we're going to sit and discuss is the 50% level. This level is where price is considered to be balanced, and where buyers and sellers are just at at a balanced state. Yes, the 50% is still considered too high a low point, but at times I am a little more hesitant to sit there and enter on 50% retracements, just because, for that simple fact that price is being balanced in between sellers and buyers. So if we do sit there and retrace to the 50%, my mindset is just making sure that I have other technicals aligned with me to add confluence on why I should be entering at the 50%. The way the 50% moves it's a very calm, it's smooth, and it's just very neutral. Like, it's just a very neutral area in the market. So I mean, if price does come to the 50%, you might see this type of price action where price is still making lower high points, and sellers might still be trying to come into the market, and price is continuously testing that 50%. And this is where you can sit there and, like I said, do a little more confluence work and add like counter trend lines and track bearish pressure around this area to make sure that price is still going along in our favor from that 50% zone. And I mean, you can see this type of price action on any price reversal zone, but mainly at the 50%, just because, like I said, it's balanced, and it's going to sit there and really take a clear breakout to occur to sit there and let price know, okay, we're going to continue overall trend, or we're just going to continue the steeper retracement. But that's the 50%. It's nothing really special to it, but you can still sit there and execute off of it and make some type of profit off of this price reversal zone. Let's go on to the next. Okay, so now let's sit there and go over the 61.8% price reversal zone. So this price reversal zone is the second most aggressive zone where price can sit there and retrace to. So typically when we're on a 61.8% retracement, more than likely you're going to see some type of price action where price is making new lower highs on the overall uptrend, until price does come down to the 61.8%. And like I said, that it is the second most aggressive price reversal zone. And more often times than not, you'll see price form that aggressive push off of it, come down, give traders opportunity to enter at this new high low point, and continue the overall uptrend like so. Reasons why people love trading at this golden zone is because you can sit there and use a lot of technical work and price action to decide if you want to sit there and take part of this opportunity or not. Just off the bat, like any other price reversal zone, you can sit there at confluences like counter trend lines to track bearish pressure and overall bullish trend, and bullish pressure and overall bearish trend. And you can just sit there and see clear price action just from this little breakdown right here on why people love the 61.8%. It's the same thing in a downtrend. Price makes a new lower low, starts forming higher low points to sit there and build enough bullish pressure to make it to that 61.8% zone. Once price does hit that zone, you can expect a very, very aggressive push downwards, and then lower high points created from there until price hits this overall take profits. So I mean, that's the 61.8% zone. It's personally one of my favorite zones, along with a lot of other traders. And just be aware, once price does come to the zone, it will be a lot of aggressive volume, but that does not mean that you are completely out of the move and you cannot catch the move from the 61.8% zone. But that's enough talking on this price reversal zone right here. Let's move on to the last two. Let's do it. So now let's go over the last two price reversal zones that are available to trade off of on the Fibonacci Retracement tool. These price reversal zones are the 78.6% and the 88.6%. They are my red zones here. I have them red because they're just very deep within price. And just some facts about these two price reversal zones. The 78.6% is considered to be a very slow reversal zone, where once price does come into contact with the zone, you can sit there and expect to see very slow movements to the upside, where price will sit there and eventually reach its new higher high point, something like that. And off the 88.6%, that is considered to be the slowest, like even slower than the 78.6%. Just considering on how steep it is within price, you know. So you can still expect the same thing to see price move very slow around this area until price gains enough bearish volume to sit there and continue the overall downtrend to reach the new lower high or lower low point within price. You know, same thing with all the other PRZs. You can add technicals to these reversals to sit there and add confluence to where exactly you should be entering within these zones. And you know, if you sit there and really hold a 88.6% retracement to the overall TP1s, like you're really making some big bank there, you know. Like say you enter at this 88.6% and hold it to the negative 27%, you know, you're gaining a lot of pips, you know. But I mean, you also have to be in the market for a very long time. And I know a lot of people cannot be in the market for those 88.6% type moves or even the 78.6 type moves. So just be mindful once you're within this type of retracement. Don't be scared to take profit at certain areas of support or resistance, because price is still going to sit there and continue the overall trend, but it's just going to take a very long time. What's up, guys, and welcome to the conclusion of Fibonacci 1.0. Thank you for tuning into the video. Leave a like if you did enjoy the video, and subscribe to my channel. Show me some love. Hopefully you guys learned some type of information about Fibonacci in this video. Drop a comment if you sat there and did. Let me know exactly what you learned and what exactly you're looking forward to within using this tool right here. You know, this tool is a very, very good tool to sit here and add to your toolkit as a trader. And do not sit here and downplay this tool right here. There's a lot of traders that sit here and primarily only use Fibonacci to trade. So don't downplay it. Take advantage of it. And I'm gonna sit here and wrap this video up, man. You know, like I said, I appreciate you guys watching the full video through. And I'll catch you guys in the next video next week. Money Mayor's out, man. Thanks for tuning in.